we wanted this to be very casual. We decided to do because of everything that's going on in the community, in the nation. There's so much uncertainty. Our hotlines are kind of blowing up lately. We're having so many questions about limited partnerships, LLCs, corporations, trusts. There's a lot that we can't control, but there's so much that we can control. And that, which we ought to control, we probably ought to. So they've asked me to start a new program. It's called Lunch with Don. I was expecting him to feed me, but I just showed up but we wanted this to be very casual, and we wanted this. So we're doing this in my office. This is my office, and if I could show you around, you've got a couple dozen hats, baseball hats up at the top that say different things: trust, trustee, general partner, limited partner. They're thinking that we wear different hats. Here's some of our research books behind us. Some of the books we've written. Anyway, this is my little world, and welcome to it. And hopefully you get fed better than I did today. But that's our program. In addition to this Lunch with Don weekly program, there's also almost every week, usually on Tuesday nights, we do a webinar, and we've had some incredible speakers over the last couple weeks. Scott Estel, former senior trial attorney from the IRS. We had one of the best stock market traders in the nation, Mike Koval, on. We've got Gene Garino, we've got Chris Johnson, we've got Randy Skeen, we've got Clint Coons. We've got an incredible lineup. And so we're kind of excited about the lineup. And then our big summit is coming 3.5 weeks away. So that'll be February 22nd, 23rd, 24th. You can go to protectwealth.com, sign up for that. That is a life-changing event. And so if you haven't been to that, we encourage you to do this. We encourage you to, we'll be posting, in fact, we have been posting a lot of articles on Facebook. So pay attention to our page, Protect Wealth Academy on Facebook. And if there's something you like, we encourage you to share it with whoever. So we appreciate you being here. One of the most frequently asked questions we get, in fact, it comes up in almost every time we have a discussion with somebody. Did you go through the steps to set up your LLC? A lot of people think that they have an LLC when really that's all they have is permission from the state to exist. And so this is a good opportunity, the very first time, to cover what I think is the most basic of all questions that we get in at the hotline, and that is how to set up an LLC. So I want to walk you through the 4 steps. Once you've ever set up an LLC, you wonder, sometimes why you hire attorneys and accountants to do this. There's only 4 steps. The documents are incredibly important, and it's important that you go through all steps, not 3.5, but there's 4 steps, and they're all critical. So very first step, and what I'm going to be doing, the textbook that we wrote years ago was called the Asset Protection Handbook, and so that we've came up with a new version in 2020. So last year, this is, I think, the 11th or 12th edition of this. But there are so many tax laws, and so I'm just going to be going over a summary of what's on page 90 and 91 of your textbook. But what are the steps to set up a limited partnership or an LLC? For that matter, a corporation. A corporation would be a little bit more complicated. So let's just start with an LLC. The very first step we need to do is we need to file an application with the state. We decide what state we want to be in. Most of you, when you're setting up an LLC, will be in the state that you exist, wherever you reside. Last year, I probably set up 15 to 20 LLCs in the state of Utah. I set up one in Wyoming. Occasionally we'll go out to another state, but if the assets are located here, if I'm running a business, most of the time you'll be doing if I got a rental property, that's going to be in the state where the rental property is attached. And so we pick the state. On a holding company, we might use a Wyoming or Nevada, but generally it's, pick the state. And then fill out the application that the Secretary of State requires. In most cases, that's going to be called Articles of Organization. Some states will call it Articles of Formation. Pick your state and go to the state's website, and it's really a simple form. They're asking for the name. You need to pick a name that is unique to that state, and the requirements for that is it needs to be a unique name that nobody else is using. And they don't even let you get too close to something that's being used. So pick a unique name. Now, if they're using it in another state, that's okay. It's like a license plate. It just has to be unique to that state. And then the basic rules is you have to stay away from swear words and obscenities. You have to stay away from registered trademarks. You cannot call your corporation IBM. That kind of doesn't work. So stay away from that. And other than that, you can do a name search in most states on their state's website and say, yeah, this may be available. And then some states will also offer, would you like to reserve that name so that nobody else can use it? The very first time I set up a corporation, I was too cheap. We were setting it up in California, a little S Corp, and the name was available. And I thought, well, I'll just fill out the paperwork and send it to them. The problem is California took a long time. They took 3 months to approve that. And in the time between the time I checked on it and the time that they actually got the paperwork, somebody else swiped my name. Well, I was too darn cheap to reserve the name. That might be a good idea if your state's a little slow at filling, at completing these applications. Most every state has an online form, but a lot of states still require that you send it in with your check and your registration fee. Most states it's $50, $100, $70. Utah here it's $70 to form the LLC, and then most states will have an annual renewal, but that'll come later. So you fill out the form. It's going to ask the name. It's going to ask for who is the manager, who's in charge of this. There are very few states that ask who the members are. They don't really care what your LLC owns. They don't care in most cases who the members are, but they want to know who the manager is. Who's the person in charge? They might ask for the organizer. Who's the person completing the form? In the event that something's filled out wrong, they want to be able to get back in touch with you. And then every state will require who is the resident agent or registered agent. Who's the person where we serve a summons to in the event that there's a lawsuit, there's an official summons, there's official something. We want to be able to walk up to somebody and hand them a notice. And so that requires that in most cases that it be a real life person. We want to be able to walk up to John Flanagan and hand him a piece of paper, and we don't want a post office box, or we want a physical address where we can walk up and find John and hand him this summons, and then his job, the resident agent's job, is to get that to you. Some cases you'll want to be your own resident agent. Sometimes you want a little anonymity, and maybe you pick somebody else, an accountant, an attorney, a friend. You don't want to pick somebody that may have a tendency to sue you. For instance, if you've got a rental property, I wouldn't pick the renter to be your resident agent, because they might very well sue you and then never get you the notice. By default, you lose because you didn't get the notice. So make sure, and in every state, you can always pay somebody. Do a Google search and look for resident agent, Colorado or Tennessee or wherever you're going, and there'll be hundreds of resident agents who are willing to sit at their desk, not do anything, and if the event ever happens where they get a piece of mail, their only job that year is to get that piece of mail to you. For that, the average fee is usually $50, $100 is common to be a resident agent. Now, resident agents can do a little bit more, and for that they charge fees. They could have an office in, a spare conference room where if you wanted to hold a meeting, you could have it there. They could answer the phone for you. They could collect all the mail for you. For all these different types of fees, they charge an additional fee. They could set up a bank account, and they could monitor, direct all mail to you, all phone calls, so that you have a business presence. But what's required by the state is that you have a resident or registered agent. So this application that you're filling out, the articles of incorporation, or articles of formation, articles of organization, they will require that you have a resident agent. And in most times, it's a good idea that you have a letter of acceptance from them saying, yes, I've accepted to be your resident agent. And then they keep a little file. I've got probably about 20 or 30 that just friends that I've served as a resident agent for. So I always keep a file, a little manila file folder, so that I can, if I get an official notice, then I serve as their resident agent. All right, so we've got the name down. It's a unique name nobody else used. We've got the manager. We've got sometimes the resident agent. Sometimes they're going to ask for a business purpose. Keep that as broad and general as you possibly can. Pay your filing fee. Send that off. If they'll allow it online, that's great. Again, a lot of states want the physical check. And then you wait. And I know that sometimes you're in a hurry to set up your LLC, but wait. Because, again, remember the very first time I set up the corporation in California and they rejected it? Well, I hadn't waited. I had, oh my gosh, I'd already got the EIN number, and I'd already hired employees, and we set up bank accounts, and we had logos, and we had stationery, and we had a website, and all of this had to be changed because the name that I picked wasn't accepted. Now had to go back. So always encourage you to wait until you find out for sure that they've accepted your name, they've accepted your articles, and then proceed with step number 2. Step number 2, in most cases, is to get a EIN number. Now, to do that, there's an easy process and a hard process. If you go to irs.gov, it's a simple form, and if you're doing this during business hours, Eastern time, they will do it right there on the spot. And you're filling out the application online, and they're there and they accept it right away. That's good. It's a simple application. Most of your accountants will do this in minutes. They want to know the name. Well, if your name hasn't been approved, then it's important that the name be approved first before you submit that. But so they want to know the name. They want to know the responsible parties that this is, who are we going to tax this to? If this is a C Corp, we're going to get, it stops. All taxable events stop right there and they're contained. But if this is a pass-through entity like an S Corp, they want to know all those taxable events that are going to happen in your LLC taxed as an S Corp, they want to know who's going to get the tax implications. So they're going to want to know the Social Security numbers of the members. That makes sense. If you own 25% of this LLC taxed as an S Corp and you get 25% of the tax consequences, the IRS, before they issue that EIN number, is going to want to know the responsible parties. It's called an employee identification number. Whether you have employees or not is totally irrelevant. So don't let that one mess you up. I was really confused about that the first couple of years I was trying to figure this out. And it doesn't matter if you have employees or not. It's a Social Security number for a business. Do not, when you're looking for this, the irs.gov, don't go to irs.com. That is a paid site. Oh my gosh, I wish I had the foresight to buy that domain name. But you're going to pay $185, $200 to have them walk you through the process that's otherwise free from the IRS. The IRS is happy to give you an EIN number for free, and it doesn't cost you anything. If you go through a paid site by anybody else, you're going to pay for it. So don't do that. So EIN number, just fill out the form. It's pretty straightforward. If your LLC is going to be a disregarded entity, meaning it's totally invisible to the IRS, you still might want to have an EIN number. On that application, they're going to ask for your social security number or the number, the EIN number of the responsible party. If your C corporation is setting up single member LLCs to hold assets as solely owned subsidiaries, they're going to want to know the EIN number of the C corporation. If it's a single member LLC disregarded to you, they're going to want your social security number. So fill out the application, get the EIN number. In most cases, you can get that on the spot that same day. Print out the form, stick that in your files, because that EIN number will be critical, especially when you're going to establish a bank account or credit or anything else. So you do W-9s to let people know if you've got employees. That EIN number is critical. Okay, once that's done, now we can go to the next step. We've got a name, it's approved. We have a start date approved by the Secretary of State. And then we do, then we go to an operating agreement. And this is a step that so many people forget. They got permission from the state to set up an LLC. They got permission from the federal government, but without the operating agreement, you really don't have an LLC. You're relying on the state laws that govern LLCs and limited partnerships, but you didn't form it. Imagine doing a corporation where you filed the articles of organization, it was approved, you get the EIN number, but you never established bylaws. You didn't have a meeting, an initial meeting. You didn't appoint president and vice president and secretary treasurer. You didn't issue stock certificates. Nobody accepted anything. You didn't. You don't have a corporation. You don't have corporate veil because you didn't set it up. The operating agreement for an LLC is the same thing. This is the formation, and it says, here's the internal workings that we're going to have. Here's who owns it. Here's what it owns. Here's our business purpose. And there's all different types of clauses. The strength of your LLC is really going to come from that operating agreement. So don't bypass that. That's an important step. So this is where we come in, where we supply really strong operating agreements. This is why one of the reasons we work with Anderson Law Firm, or we work with Scott Solberg and his law firm, or we work with other people, other different law firms who have really strong operating agreements, not a quick little fill-in-the-blank form you bought off the internet for $29. Those work until you get, but they're not good for protecting assets. They might run your little business just fine. Single member LLCs, it might be a very simple form because there's no buyout clauses, there's no what if, my partner dies, there's no anticipation of other events, it's just you. So a single member LLC, a lot of people say that it doesn't require a operating agreement. I disagree. I think every LLC requires that operating agreement. Use good, solid forms that have been prepared by asset protection attorneys, and then you can fill it out. You can fill in the blanks yourself, but make sure that you have that operating agreement. It should be signed. It does not need to be notarized, although it could be. But it's an internal document you're never going to file with the state. Nobody's going to see that, but it's important that you have it. Again, that's where the strength of your LLC comes from. And then the fourth step to set up an LLC is to now fund it. It has to own something. So you can take your articles of organization that have been approved by its secretary, you take your EIN number. Those are the only things that the bank should need. They don't need your operating agreement in most cases. You might give them the first page and the last page, but what's in the middle is none of their darn business. So I've got proof that I have an operating agreement, but the two things that the banks and the credit unions will require is that you have approved articles and that you have an EIN number. Now you can go get a bank account and put money in. When you put money in, that's normally considered on the books to be a capital contribution to the LLC. Let's say I put $10,000 in to get my business up and running. Once that business is up and running, I could always do a return of capital and pull the money back out. That's not a tax consequence to do that. I just put money, it's like a loan. It could be a loan, it could be a loan with a promissory note, but most of the time, owners just simply, it's a capital contribution, a return of capital when you pull it back out. And now we set up a set of books. If you're going to have a separate bank account, if this business is going to stand alone from anything else, it needs its own bank, it needs its own set of books. Now that doesn't have to be complicated. It could be an Excel spreadsheet. It could be an old green paper ledger where you're keeping the debits and the credits, or it could be the income coming in, the expenses coming out. You could go to QuickBooks, you could go to Peachtree, you could get as sophisticated as you want. Just keep it as simple as you can. But you want a record of everything that goes in and out of this business, because you're saying to the world, this is a separate legal entity, and anything else in my life is unaffected by what's happening here. For you to have good charging order protection or good corporate veil protection, you need to treat it as a business and start thinking as a business owner and wear your little manager hat that says, I'm a business owner, this is a separate legal entity. I hope that makes sense. And then if your LLC is going to own real estate, then we do a quitclaim deed or a warranty deed, or somehow we transfer the properties in. If it's going to own a bank account, if it's going to own a brokerage account, then we begin the process of funding, which is putting stuff into the LLC. A lot of LLC, your operating agreements could be, could be 25, 50, 100 pages long. Here's the agreement. And then what we could do is we stick on a piece of paper at the end saying, here's what it's called, an Exhibit A or a Schedule A or an Appendix A. Here's what the LLC owns. It owns a bank account. It owns a piece of property located at 521 Maple. Here's the legal description. It owns whatever it owns. Then what could happen? That Schedule A, that Appendix A, should be notarized. And every time we change the major assets, not every time the brokerage account buys a new stock or sells a stock, but the brokerage account, if you're adding a brokerage account or taking away a bank account, then the Schedule A ought to change. The operating agreement didn't change. The agreement between the partners or the members didn't change, but the assets might. And whenever that happens, that Schedule A or Appendix A should be signed and notarized. All right, so with that, Kendall, do we have any questions? What have we got here?
No, yeah, so you can see them right there too, but no, a lot of great comments. It looks like people got their questions answered pretty good. Questions about the corporate veil piercing and different things like that, what to file. Every LLC needs to have an agreement filed with it. I guess, is that always the case in every state? You always have an agreement to file with it?
Well, we don't file the operating agreement. Does the LLC have to fund? Yes, we have to put something into it, or the LLC doesn't exist. It's sort of there, but it's kind of a shell without any way. And remember, there's two different types of asset protection for any LLC. There's a corporate veil, which means it contains the risk inside. If something happens, you've got a rental property in there, and something happens inside of that LLC, you want it contained so they can't come after the operators, the owners, the managers, the members. You want to contain that. That's called corporate veil protection. For that corporate veil protection to be strong, we need a separate set of books. If your LLC is going to require a tax return, you do the tax return. If it requires a annual maintenance fee or a management fee or a filing fee with the state, we have to pay the filing fee. Or your protections go away. So if you're going to play the game, if you want good corporate veil protection, you have to play the game, and you have to keep up your corporate formalities. I see a lot of people that have a single member LLC, and they really don't have a separate set of books. They don't have a separate bank account. They're commingling. They're writing their grocery check out of that because nobody cares. It's disregarded. I'm sorry, you have no corporate veil protection because if you don't recognize the separateness of this legal entity, you can't expect the courts or even the IRS to recognize this as a separate legal entity. So that's important. And then the other type of protection is charging order protection. Let's say I personally get sued. Can they come take that LLC and everything, all the contents of it, can I take that away? That's called charging order protection. And single member LLCs in most states, 45 states, don't have good charging order protection, which means if you own all of your rental properties in single member LLCs where you're the member, if I sue you, I can come take those away from you. That's why we use Wyoming and Nevada and South Dakota, Alaska, Delaware, those 5 states very clearly in their statutes say we will give charging order protection to single member LLCs. And then beyond that, multi-member LLCs, whenever there's more than one member, it'll depend on your state statutes as to how strong that charging order protection is. We like states that have strong charging order protections for multi-member LLCs. But that's maybe a discussion for another day.
Let's talk about different states that
we can
provide
talk
protection.
about trusts, and we can talk about this whole lunch with Don thing was meant to be really casual and just answer questions. So Robert's asking, so $1,000 in an account? Well, something in the account. I like to have enough in the account that I'm not charged bank fees. If I only have $80 in my account, the bank wants to charge me $10 a month for, no, and so I like to stay away from that. I don't like those stupid bank fees, and sometimes I'll use a credit card or credit, or what do we call it?
A debit card?
No, I'll use a credit union instead of a bank to avoid some of those banks. But I hate the bank charges for every LLC that I own. So corporate formalities, great point. Nevada has great protections. That's true. I think that's most of the questions we have. Kendall, did we cover most everything?
Yeah, I think it's great. Corporate formalities, big deal, and maybe go into more depth on that, maybe different states and why sometime another time, and tax too.
Yeah, we didn't cover, like, should we be an S Corp or a C Corp? Let's kick that down the road for another day. How does my LLC interest now tie into my trust? So that upon my death, I've got a 50% ownership in this LLC. How does that avoid probate? We can talk about that another day. The hotline is still open. We encourage you to pay attention to the summit. If you can attend that February 22nd, 23rd, 24th, we'd love to have you. But this was meant to be kind of a casual discussion. I'm sorry I didn't prepare anything. I just kind of shooting off the cuff, and so
Supposed to be lunch.
I
like
it. But I'm still waiting for Kendall and the staff to feed me. But I think I'll have to wait for another day. I hope this ongoing series. Share it with your friends if you found this to be helpful. We plan to do this every week for at least for a month or so and see how it goes, and hopefully it'll grow and become viral. Oh my gosh. Anyway, we're just casually, this is an insight in my office and in my life, and if we can help you establish your legal entities, if we can help you save money on taxes, help you do an estate plan, we'd love to do it. So thank you very much for being here. Have a great day.